The new USDA report unraveled by Terry Reilly and the market reaction today at Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So Terry, we have had a bunch of developments today with the USDA report, their acreage report. Some of them were already expected by the market with larger acreage for soybeans and stronger corn exports. But what makes you think that the market has reacted positively for corn and not so much for soybeans?
The corn carryout for 25-26, the current crop year was down 125 million bushels. And as you noted, a lot of the acres were already incorporated in the analyst estimates. But what was not incorporated was probably uh, the June 1 stocks for corn. So therefore, USDA was prompted to raise their feed and residual use for U.S. corn by 150 million bushels. I think that caught some people off guard. They did lower the ethanol, corn for ethanol use by 25. I thought that was warranted, but the carryout going down, 125 million bushels was 53 million more than what the average trade estimate was looking for. So corn jumped out of the gate from reaction. Now for 26-27, that lower carryout actually USDA lowered the carryout for new crop corn for the U.S. by 170 million bushels. That was 83 million more than what the trade was looking for. Now, one thing that they did with the new crop corn balance sheet, they raised the exports by 50 million bushels. Um, I didn't see that coming. I thought that was a little bit premature. We do have a little bit maybe new crop corn interests out there. But what caught my eyes, if you look at the world balance sheet for 25 and 26, they actually lowered Chinese corn imports by 1 million tons to 5 million. And their outlook for corn imports going forward for new crop for China is actually only sitting at 6 million tons. So that that increase of 50 million bushels for new crop for the U.S. balance sheet was a little bit suspect, in my opinion. But corn commitments for the current marketing year are really fantastic at this point. And I guess USDA is optimistic it will spill into the following marketing year. One other thing or a few other things to note with the changes in the corn balance sheets is for 25-26, they did raise Argentina by 2 million tons to 63 million. They left Brazil unchanged. But as far as new crop corn production goes, they lowered EU corn production by 3.7 million tons to 53.8, still only about 3 million tons below the previous year, which was 2025. But it tells you the magnitude of the heat and dryness that we've seen across Europe. So not only Eastern Europe is still expected to see below normal. I should say Western Europe is still going to see below normal precipitation over the next week or two. And temperatures are still expected to be fairly warm, so they're not out of the woods yet. And then you look at the U.S., the central areas are going to dry down over the next week, or at least most of it, and receive a little bit below normal precipitation. So corn was the most surprising aspect of this report, in my opinion. If you take a look at the wheat carryout, actually came in 8 million bushels below or above trade expectations, still down 22 million bushels from the previous month. Widely anticipated that all three winter wheat classes for production would be lower. I think in the next report, we'll see another downward revision or next update. Spring wheat, other spring wheat actually was reported above trade expectations, so that helped partially offset the wheat production. But overall, U.S. wheat production is only down 7 million bushels from USDA's predicated prediction because there was no other spring in Durham production estimate last month. This is the initial estimate. But year over year, just keep in mind, hard red winter wheat stocks are down 129 million bushels to 308 million. It's a little bit tighter carry out there. And that's one of the reasons why we're seeing the appreciation month over month in the wheat market. But then again, wheat was higher to start today to begin with renewed or increased concerns over the Ukraine-Russian conflict. But wheat going forward, I'm a little bit bullish. Corn, I definitely think it will stay up above 450 going forward. Looking at the U.S. Balance sheet for the beans, appropriately, they raised the harvested area by 700,000 acres. But in the beginning stocks for new crop were down 10 million. That's because they increased the exports by 10 million bushels for the current marketing year to 1.520 billion bushels. It's going to be a little bit tough to get there, but we're somewhat on pace. But with the lower carrying of 10 million and production up 40 million for the new crop balance sheet, USDA decided to take exports up 30 million bushels. Might be in part to the renewed optimism that China will be buying more U.S. beans. New crop sales to week to date to China that USDA reported is just over 600,000 tons. That's refreshing news. But I think the trade wants to see larger numbers going forward in order to.
Yeah, that was the next question I want to get into. So, what do you think about the timing of the next purchases for both corn and soybeans, since we already had meaningful purchases in the first half of the year?
Well, I think it's also leading up to additional talks between the U.S. and China. But China's just probably getting ahead a little bit. We're already only not even halfway through July, so we have a little bit ways to go for new crop sales to populate before the end of the crop year. But they are lagging. Generally, historically, if you go back the last 10 years, you would see much larger sales. So I think the trade will be watching that, the cumulative new crop sales going forward. I think that's very important. I thought a lot of people were anticipating a lot of these sales would show up in the current marketing year, 25-26. They didn't really materialize for months. Finally, they just started to trickle in a little bit for China. So most of the sales, I think, are going to be between now, maybe pick up towards the end of the marketing year, and then obviously during the first half of the first quarter of the next marketing year. I think that's when China's really going to step in. But it really all depends on how Brazil gets along with their plantings, and then Argentina as well. So that's a way to go, but that's we're already starting to the trade's already starting to monitor what they're thinking on the expansion of Brazilian soybeans, which might be the slowest expansion we've seen in years, is in terms of plantings. But getting back to the U.S. balance sheet, the beans, there was nothing too surprising out of that in the products. With the corn for feed going up 150 million bushels, I think that prompted USDA to take down domestic disappearance for U.S. soybean meal by 300,000 short tons for both crop years. But what they did, they offset that by increasing the exports, what they probably should have, because the export market for soybean meal is excellent. And then for soybean oil, virtually there was no changes for new crop. But for old crop, they did take exports down 50 million pounds, not a very large number, but they took imports up a little bit. And, they left biofuel unchanged, which I think USDA needs a little bit more data to fiddle around with their soybean oil for biofuel use. That's a hot topic these days because the rumors of some plants deciding not to use soybean oil and use maybe imported feedstocks, but instead because of traceability issues. But the biofuel space is still interesting. But the bottom line is we're not going to meet the regeneration per se that the government is shooting for by the end of the year. But I do expect soybean oil use and other feedstocks to really ramp up there in the last quarter of 2025 to try to meet those mandates. But overall, I mean, as far as the Brazil and Argentina soybean production was unchanged for 25-26. I know some analysts were looking for some changes, but those numbers will probably get ironed out as soon as the rest of the crop is fully collected and accounted for. But for beans, I do expect maybe a little bit of appreciation in that market, and I expect it to basically, with prices to hang in there, easily get back up to the $12 level, maybe even hit 12 and a quarter if we run into additional problems with the U.S. Weather over the next 3 to 4 weeks.
Yeah, so what do you expect for the upcoming week? Maybe the week following.
It's going to be still a little bit of geopolitical trading, but more centralized around the weather forecasts. They've been kind of chopping around this week. At the beginning of the week, we saw a very strong rally because of the change in the weather forecast over the 3-day holiday weekend. But headed into or after the weekend, but headed into next week, it really all depends on the changes in the weather models. Right now, a little bit of the heat was taken out of the central growing areas for the summer crops, but we got a lot of heat building up again out in the West Coast, which is going to make its way back into the Midwestern areas by early next week, actually. With these hot and dry temperatures, obviously we're going to continue to see stress, but in some areas there's plenty of soil moisture to maybe counter that at the moment.
All right, Terry, thank you very much.
All right, thank you.